Hi, and welcome. This is Terry Bach, your host of the Rewrite Your Money Story series. Today, and actually all week, we've been talking about overspending and debt, which is so important to me because in talking with entrepreneurs over the years, I've seen how many of us overspend in our businesses, and we then get into debt for a variety of reasons. So I've invited several experts on money and business to discuss the topic of this event, which is really how do entrepreneurs get into debt? How do they overspend? And sometimes why do they overspend? How to avoid all of that? And then how to help them get out of debt once they're already there. So today I've invited Deborah Daniel to give her perspective as a CPA. She's the founder and the CEO of Charter Accounting, and became an entrepreneur in 1993, soon after getting her MBA. So during the next 25 years, she has helped entrepreneurs and individuals in all areas of money and finance. And having thrived in the traditionally male-dominated field of finance, Deborah extends her money knowledge into the areas of business success strategies and building overall financial confidence. So by helping her clients figure out what numbers really matter in their business and their lives, she helps them up-level their business and their personal lives. So welcome, Deborah.
Well, thanks. I'm so glad to be here.
Yeah. I'd like to start out by finding out, I always think it's interesting to find out how people got into the business that they're doing. So what journey brought you to being a CPA?
Well, that's really interesting because my undergrad was actually in finance, and I got a job as a financial analyst with a pretty big real estate developer in Atlanta. And I noticed that all the people above me, the corporate controller, the CFO and all that, they were CPAs. So I was like, oh, I could do this. So I actually just kind of stepped back a little bit while I was working there, and they were great. They paid for my MBA, which was nice.
Oh, nice.
And I went back. I don't know, do companies still do that? They did back in the 90s. But which was really great because I never had any student loan debt, which I think is really, really important. My parents were very adamant about us not having, my sister and I not having student loan debt. And I didn't have to really pay. I incurred no debt to get my MBA, which is really powerful to not have that.
No
but
kidding.
So I took a few extra classes that I needed for the accounting part, and then I sat for the CPA exam, and I passed it the first time. It was not really key to the current career that I had, but because I didn't have to be a CPA. But the funny thing was, I knew I wanted to be an entrepreneur at some point. And so when I was recruited away from that company after 5 years working there to work for a Fortune 100 company, I really didn't like the job very much. And I was too proud actually to call my old boss and say, hey, can I have my job back? So I had just gotten married, and we looked into, I knew I wanted to be entrepreneurial. So we looked at buying a franchise, and I was 26 years old. I mean, we didn't have $250,000 to,
Sure.
To invest in a business. And we weren't certainly even then happy with having that much debt. So it was actually my husband's idea of, he's like, well, hey, you're a CPA. Why don't you practice what you're doing? So I opened an office, income taxes. We did a lot of simple, easy returns. And then in the next 5 years, I bought 5 small accounting businesses and just aggregated those together. But that kind of leads to the topic that we're talking about with debt a little bit.
Right.
Because there's a difference between good debt and bad debt, right?
Yes.
Good debt being I purchased those practices, but those were revenue generating, assets, right?
Right.
So
Yes.
we financed them a couple of different ways. I think you have to be creative as an entrepreneur and as a woman sometimes to figure out how to get your hands on the funds that you need. But fortunately, a lot of business owners that are wanting to sell their businesses will finance for you. Back in the 90s, now, if I wanted to buy an accounting practice, and a lot of businesses, there actually are finance companies that will do that for you, even without going through SBA, which I've had a lot of clients use SBA over the years.
Interesting.
And, we were creative, and, fortunately my dad and my father-in-law had had some money in their retirement accounts that we could borrow. Now, I wasn't going to not pay my parents, my dad and my father-in-law back for buying it. But if you're going to get revenue from it, that's one of the key indicators to me of what I call good debt versus bad debt being, buying a really expensive purse, which I see a lot of people running around with, and then now not even being able to afford the purse, but then now you're paying, double it by the time you pay it off on your credit card.
Exactly.
That's
No.
bad debt.
What are some other examples of good debt?
Good debt to me is your home. If we waited until we could pay for our houses cash, no one would have a house, right?
Right.
I do get this question often with clients. Well, should I pay off my mortgage, or should I keep it for the tax deduction? Frankly, I don't think it's ever worth the tax deduction, because just simple math. If you're going to spend $1 in interest so that you can save even 50 cents, which none of us are paying 50 cents now with the great new rates, I would rather keep the dollar, right, and pay the 50 cents in tax. But you're not going to be able to afford a house without having debt. Sometimes you need it for a car. I mean, obviously most people can't afford a car without some kind of a debt. But to me, I always try to make it the shortest amount possible. Trying to get a car payment of 7 years so that you can afford the car you want probably means you don't need that car, because most cars aren't going to last you for 7 years.
Mm-hmm.
So those to me are, any kind of thing, rental property, investment property, something that's going to generate you a revenue, because there is a leverage going on there. If you can borrow $100,000 and buy something that you can now make a monthly income from that's greater, that's good. But credit card debt, just in general, I think is bad. I mean, any kind of thing that's if you have to borrow to pay for your living expenses, that's a problem.
Right. Okay.
And I think business owners, like you said, though, also make a mistake of, oh, well, I'll buy this program or I'll do this thing because I have my credit card.
Right.
That still, everything needs to have a return on investment.
Mm-hmm.
I mean, I have a really smart computer from all the downloads and all the programs that I've bought.
Exactly. Yeah.
Afford that with your cash flow, but don't borrow to do that kind of stuff. I mean, if you can't afford to do it out of your monthly cash flow of your business, then wait until you do.
Yeah, and I think that's part of the problem is, a lot of us think that, oh, I need this all at the beginning. And realistically, you probably don't need a lot of that until later anyway.
Exactly. Because I will tell you, I'm an entrepreneurial junkie. I love all kinds of information about being in business. It's the kind of, I would rather do that than watch TV in the evenings. But the fact is, especially in the beginning part of your business, you need to be spending your time on revenue generating activities, and buying a lot of programs and buying a lot of stuff is not that. You need to be networking. You need to be, making sales calls. You need to be doing the things that make the tax register ring, not spending a lot of time studying, even if you like to do.
I know. I'm kind of a junkie on that as well.
Aren't we all? I think that's part of being an entrepreneur.
I know. It's like, what else can I learn? So why do you think most people struggle with financial and money confidence?
Oh, I think it comes right down to mindset. It comes down to money is such a taboo subject for most people. I think it's really a problem that we don't ask our friends what they're doing with money. How are they investing money? How are they paying for things? Or you're sitting around the dining room table at Thanksgiving and no one will talk about money, either because they're embarrassed because they make too much, or embarrassed because they make too little, or they just don't want people to know.
Or they have debt.
Exactly. It needs to be a more open subject. I mean, I think we have, there's research that shows that you form your money attitude in the first 7 years of your life. I mean, so kind of like, if you hear a foreign language and when you're little, you have a better affinity for it down the way. Exactly the same thing. Yeah. And so you heard something that we couldn't afford it, or money is hard, or, money is the root of all evil, which is a misquote, by the way, because it's really the love of money is the root of all evil. Right. And those things carry through. And even if you do get successful in your business or in your career or whatever, you still have those same imprints. And it makes people that do get success and have money overspend sometimes because they don't know how to handle it. And I think it's an education problem as well, because isn't it crazy that we get out of high school and college potentially with never having had a personal finance course? Never having been taught the rule of 72, that this is how money doubles, and this is why banks want to lend you money, because they're making money on, people just we're not taught that. It's not intuitive. We're not born knowing this is how money works. Right. And I think that's a really problem. And because of that, people don't look at their numbers. I mean, I have clients that bring me stuff
for their numbers.
They haven't even opened up their bank statements and stuff. They don't even know. They don't know how much their credit card bills even are, which is a real problem. Because without knowing where you are, it's kind of like taking off for California from Atlanta. There's a million ways to get there, but if I don't have a path, I'm not going to get there. And without looking at where I'm starting from, which is what is going on with your money today, you can't really get to that next situation, which I think leads to everybody says a budget. And I think I don't like the word budget. I feel like it's kind of like saying the word diet in a way. Yes. Budget feels limiting, like I'm not letting myself have stuff. Just like a diet feels like I'd rather say I have a healthy eating plan. So I say, let's get a money plan going for you. Right. Yeah. The difference being there, it's exactly the same thing, but it's like I'm choosing the things that I need to spend on instead of my budget telling me what I can't have. It's all about the mindset. It's just in the framing of it. But when you have a money plan, when you know what your monthly baseline is, which that's, how much is my housing cost? How much are my groceries? How much are all that kind of stuff? Then you can have the freedom to know, hey, it's okay to buy this new sofa, or I can spend $2,000 on vacation. If not, you're really flying by the seat of your pants. And it's scary to be spending money and not know, not know what's going on. Right. And I think anytime you really dig into it and know what's going on, it gives you that confidence. I mean, it also helps you determine what your non-negotiables are in a way. Mm-hmm. Like I know what my baseline is really well, and I know how much extra money I have every month. And I know the things that I'm willing to spend those on. If it's going to bring me more time, more revenue for my business, increase my relationships. And then maybe that means, doing something fun with my daughter or whatever. Or be something that helps my health. Because I know what my discretionary money is every month, I almost always answer yes on that. I mean, those are like easy questions. If it doesn't, I think twice about buying stuff that I may or may not need if it doesn't satisfy those 4 non-negotiables for me.
So you mentioned non-negotiables. Can you explain the difference between a negotiable and a non-negotiable?
Sure. I mean, because the thing is, not everything falls into either adding time, revenue for my business, relationships, or health. I mean, so if it's something, if it's something that doesn't fall into those categories, I mean, like, you could buy a second home. I mean, I don't need a second home. That would not buy me more time. That would probably maybe help relationships with my family members, or actually could hurt them because everybody wants to borrow it. I mean, you really think about, how does this really help me? Or clothes. I mean, I don't need more clothes to make more money, have more time, have better relationships, or have better health. So when you're clear with what are the yeses, it's a lot easier to make decisions on the no's, or the possible no's. You know what I'm saying? It's not an automatic yes for those things. Does that make sense? You see the distinction there?
And I'm just wondering too, for the listeners, what might they ask themselves? You gave us a bit, like, does this give me more time or more money or whatever? Are those some of the questions?
Kind of like the Marie Kondo, does this bring me joy?
Yeah.
A little bit. But I think too, if it's a big purchase, I mean, one thing that I've heard other people do, I don't practice this myself, but I think it could work, is if you see something at the mall that you want to have, brand new great purse or expensive shoes or whatever, because some people are really into that. Then, if you leave the mall and still want to go back the next day and get it, then it's a good idea. But if you have a chance to cool off on it, you probably didn't need it. Right? I mean, Absolutely. That's a little way that you can use it.
It's not impulsive buying.
Exactly. Because I think that's where we get into trouble. Just like I've started ordering my groceries, just because I tend to be a little bit of an impulse buyer on the end caps of the grocery store. And that's affecting my health plan. So the same thing with your money. Don't be an impulse shopper. Do a little bit. I don't like to spend a ton of time shopping around on stuff, because I think the internet makes that so easy for you. But just really just take a breath, sometimes. Right. And I think that's really true about our business, because people I'm a lot in the women's space. I do a lot of speaking around the country at different women's events, and people jump on things impulsively. And then after the fact, they've spent $1,000 on a program and they're like, oh, do I really need that? I mean, so I think
Or
you
did I
can't
ever really use it? Yeah.
Exactly. I mean, that's the big thing is, I mean, you don't want to deny yourself. And that's why I like the idea of money plan versus budget, but you just need to know what your bandwidth is. And the fact is, if you do this early on, I mean, I've been married for 26 years, so we pretty much can do whatever we want to now because we were very disciplined at a young age when we didn't have the resources that we do today. And so time is your friend and your enemy when it comes to money and debt. I mean, when you save at an early age, it has a lot of time to double. But when you start out with a lot of debt, I mean, I really feel bad for these people that are coming out of colleges and graduate schools with hundreds of thousands of dollars of school loans. That was not the case when I went to college. I mean,
me either. Yeah.
That's very hard how do you even buy a house when you have $200,000 worth of student loan debt?
Exactly.
I mean, unfortunately, you've got it, and that's one place people really should be more cognizant of what they're spending money on. Because if your career that you're going into isn't going to earn you the revenue to justify that, it's the same thing. That $200,000 in debt, you really need to think twice about it because you will be struggling. I had a client that was a doctor even, and he had a pretty good salary. He didn't have his own practice, but he was working for a group and making, a couple $100,000, I think $350,000. He was still in his 40s paying off his student loan debt. That's insane to me.
I know it's not uncommon, sadly, but
it really isn't.
Is an emergency fund more important than paying off debt? How would you weigh in on that?
I would say, and I think, I think this is really true. And there are alternating thought processes on this, but I do think that having an emergency fund is more important than paying off debt first. Because the problem is, if you don't have an emergency fund while you're trying to pay off the debt, every time something comes up, you're in trouble. What if the tires go? Or what if, and then you're getting yourself into more debt, so it's better to have a systematic, smaller repayment plan on your debt because you've got a good, every time something new comes up, like the kids need, braces, or you need a tooth that needs to be filled or whatever. You can't be so tight on paying back your debt that you can't afford to fix your kid's tooth. I mean, that doesn't make sense.
Yeah. And then it'll just
so that's why I think it comes first.
Yeah. Okay. So emergency fund. Is there an amount? I've heard, 6 months of living expenses should be in a savings account. Are you
right?
A savings account?
That's the number that most people say. I think you need at least the net of that, right? I mean, hopefully, now the the unemployment rate is so low. People are finding jobs pretty quickly. I think you have to temper that with what's going on in the economy. I mean, probably back in 2008, 6 months wasn't enough for a lot of people.
Right.
Because, it was really rough. I mean, that's not the current environment. So I think you can kind of ebb and flow a little bit on that total, depending on what's going on in the macro. I mean, and by that, I mean, what's happening out in the world. I think you have to focus on your micro, which is you and your family and your business income the most. But you can't live in a bubble. A fish can't swim, a fish can't fly, bird can't swim. So you have to be cognizant of what's going on around you. But if you have your stuff tight, your money plan and what's going on, you're not going to be as impacted by, bigger issues like 2000. I've been in business for 25 years. So we had the 2001 tech bubble. We had the 2008, recession, semi-depression that most people live through. And you've got to be ready for that. Then you've got the other side of the coin, having been in business for so long, in the late 90s, when tech was so, it was really happening. And here in Atlanta, especially, we had like the Olympics, we couldn't find people to work. So you've got to really temper, how you're set, because you may have to, in your business now, pay people $5 more per hour to do the thing you were doing before. You've got to be ready and have those reserves.
Right.
Both personally and in business.
Absolutely. The problem is getting to that place.
Exactly.
Yeah. So what are I know you do a lot of different things in your business. What are some of the ways that you help clients?
Well, our main business, usually the main entry point, gateway into my world, is because I'm mostly known as a CPA, is we help businesses and individuals with their taxes, everything on the business side, because I am passionate about people actually making a profit. It's not all about the sales. I'm not a sales coach. I don't tell people about sales, but I can help them be more profitable. So everything related to that, helping them with setting up their systems, QuickBooks, and what is the easiest way to track my information. I also do financial planning with my clients, because I feel like that one of your money plan items in your business is investing some of the profits that you make in the business, because we're not going to be able to do these services forever. So of all the revenue streams that you should have in your business, one of them is putting some money to the side to be earning for you, because we all need some kind of revenue that isn't generated by our time. If not, we might as well have a job, right? I mean,
yeah, exactly. Yeah, and it's just smarter.
Exactly.
To have money working for you than you have it. Yeah.
Exactly. Call that the mailbox money. It's happening, and you're getting deposits in your account, and you're seeing it on your bank statement that you didn't have to generate the time for.
Exactly. Exactly. Well, thank you. Would you like to describe the free gift that you have for our listeners?
Sure. Because it is tax, we're here in the middle of March, right? And it is tax season. I thought an infographic that I put together for my clients and for a lot of people, it's 10 things everyone should know about the new tax law, because this is the first time that we are actually seeing the impacts of the tax law that was passed in late 2017, the most major tax law that we've had since the Reagan years, in the 25 years I've been doing taxes. So the playing field has changed a little bit, and you really, it's like anything else. You're not going to win the game if you don't know the rules. So
Very true.
Figuring out what the rules are, and the thing is, it's not illegal to pay the least amount of tax that you can if you're following the rules, right? And so it's up to you to know what those are, because I do think it is all about how much money we get to keep, and it's not just from a tax perspective. It's where are the other, taxes are a huge leak in people's business, but also things that they're spending on. But this lists out just 10 things. A lot of them are business related, but a lot are personal related too, because I think I said before, I have never in 25 years of being in business seen a business that was truly financially secure and successful where the owners did not have their own personal financial act together. It's just, it's mutually exclusive. It can't happen.
Right. I agree. Okay. And for the audience, all you have to do is click on the button below the video, and it'll take you right to Deborah's free gift. So Deborah, I really enjoyed talking with you today. It's a lot of good information, a lot I didn't know too, from a different perspective. So thank you for being here.
It's been a pleasure. This is the kind of, I love talking about this. I do a little money minute for my clients every week. It's just it makes sense to me. There's order in the world when our money is under control.
Absolutely. I agree with that. So and for the audience, I want to thank you for being with me all week. It's been a great week with a lot of new information from some amazing experts. And I hope you've enjoyed the series, and stay tuned to my next one to be announced. Thank you.